Let's start with your big picture outlook for 2026 as informed by some of the Investopedia readers, perhaps.
Yeah, readers, individual investors, those we survey, those that come to Investopedia, are pretty confident going into the end of this year, and why not? And end of 2025, I should say, and why not? They've had pretty substantial gains. And you and I have talked about this. Individual investors, retail investors, kind of stuck with it through all the tops and turns that we saw in 2025, through all the tariff craziness, through all the big dips in the big mega cap tech stocks. They kept buying, they kept confident, and I think they're going to continue to be so going into this year. That said, they are worried about bubbles. They're worried about bubbles in the AI stocks. But as you know, they own these very same stocks that they're worried about, yet they continue to buy them. So it's this weird feeling of, well, things are pretty good and I've done very well, but I'm worried that maybe we've done a little bit too well. I'm not willing to change the composition of my portfolio. Ironic that on the first trading day of 2026, we see a lot of those same stocks leading the way.
Yeah, and we're going to get to some individual names in a second here. I just want to go over some of the risks. You've already highlighted some of those for the year. Midterm elections, another one of those. And, you know, we have this 4-year presidential cycle, and this particular year in which we have the midterms can be a little bit dicey, especially in the second, third quarter. That's just a seasonality play. That's history. Anything else on your radar or that you want to add to that?
Yeah, we got to watch the labor market. Everything else seems okay. We just got that first initial reading on third quarter GDP that blew past estimates over 4% there. So I think that we got to watch the labor market, because the labor market will dictate the direction of the Fed, even though we're going to get a new Fed chair by May. Fed Chair Powell's term ends in May of this year, and the president has promised to name a nominee. We'll probably get one pretty soon here to fill that chair. It's going to be a more dovish Fed. That said, if the labor market continues to weaken, the Federal Reserve, no matter who's in charge, will have no choice but to potentially loosen interest rates a little bit more, which could trigger inflation. So all these things are connected. That said, the labor market is the linchpin. If the labor market weakens, we get unemployment rate over 5%. Consumer spending is going to weaken, and that, as you know, has been powering a lot of the discretionary spending. I know you're going to talk about travel stocks and luxury travel. That's been really strong. But if the labor market weakens, you're going to see spending drop from the top all the way down through the bottom ranges of the income earners throughout the United States of America.
And the good news there, at least we're going to get the data on time, at least for the near future, I hope. I want to call up the Wi-Fi Interactive here. We have a heat map with some of the stocks that you are watching this year. And this is today's performance as we see it. We can see Constellation up about 5% there. I'm going to put a 1-year look just so we see what these stocks have done over the last year. Berkshire Hathaway up 10%, despite, I guess this is the first day that Greg Abel is taking over for Buffett. We got Oracle there, Constellation, as I just went over, Robinhood up 185%, and then Strategy down about 50%. Let's go through them.
Yeah, these are the stocks that I'm watching pretty closely. Let's start with Oracle, the poster child of the AI overspend, potentially a lot of doubts going into the end of the year about Oracle's spend on AI, about its investments in OpenAI, but also a lot of concerns about its debt. Now, there's a lot of other companies to be concerned about. Oracle is a very strong company with a big market cap and pretty solid leadership. That said, this is the one stock that a lot of investors were focused on towards the end of the year. Is this going to be sustainable? Is the spend on AI going to pay off? I'm watching that pretty closely. Constellation has been doing very well as, you know, the de facto poster child power generator for the AI build out of all these data centers. So it's been an extremely strong stock. Is that demand going to continue? Constellation being among the biggest of the power generators providing to this sector. I'm watching that stock closely to see if that demand continues and if the enthusiasm among investors for these power stocks that are supposed to be powering the AI build out remains. And also Robinhood, one of the strongest stocks of 2025. That is a huge risk play. But Robinhood has been making some very substantial moves over the last couple of years. The most recent move is this move into sports betting. And you and I have talked about this, this slamming together of sports betting, probability betting, stock trading, day trading, crypto, DeFi, and 24/6 trading, tokenization. All this is coming together very quickly. Robinhood is right in the middle of it. Let's see if the investor enthusiasm for Robinhood continues as well. And then you just mentioned Berkshire Hathaway. It's the beginning of a brand new era. The beginning of a brand new era. The Buffett premium may have disappeared. The stock was up 10% last year, but the market was up much better than that. We'll see what happens with that huge cash trove. And we know Buffett's not going to just disappear and start playing
he's still chairman.
Bridge. He's still chairman. He's going to be consulted on everything, but this is Greg Abel's company now going forward. I want to watch Berkshire Hathaway. So many people have become millionaires and billionaires with that stock over the past 50 years.
One more here. I don't think we got to strategy. So this is a stock that was kind of bucking the trend of all these other winners here. So, and this is a stock that was just, I'm going to show, that's a 1-year chart. Let's show the 5-year chart there. And you can see this is, it's looking kind of bubbly there in 2025. What do you think this portends for the next year?
Well, remember, strategy was MicroStrategy, but then Michael Saylor said, I'm going to go all in on becoming a Bitcoin treasury. And the problem with becoming a Bitcoin treasury is that that's your balance sheet. And even if Bitcoin is down, what was Bitcoin down some 20-25% towards the end of this year, end of 2025, if you're a Bitcoin treasury, that means your balance sheet is heavily dependent on the fluctuations in that coin, and you're being valued off of what might happen. And that's why you see that stock being down much worse than Bitcoin itself. That seemed like a good idea at the time as Bitcoin was soaring to $120,000 per coin. But as soon as that coin starts falling, and as soon as there's doubts around, the strength of the momentum with Bitcoin, which seemed to fall apart towards the end of 2025,
Sure.
you're going to see companies that are relying heavily on putting Bitcoin in its treasury. And that includes Tesla too, by the way. You're going to see them suffer even worse than the price of the coin itself.
Interesting. We got time for one more. So anything else you want to tell the viewers for this broadcast about the new year?
Yeah, well, there's a ton of things that could happen. It's going to be a very dynamic year. But as you and I have talked about on your pod and in other places, this tokenization of assets, of stocks and other real assets that are backed by actual things like either gold or the dollar or by a company's balance sheet, those being tokenized and being traded 24/6 on this new exchange in Texas, that is going to do some very interesting things to pricing. We're entering this brand new era where all of a sudden you have the real stock, which trades 9:30 to 4 plus after hours trading. And then you have the tokenized version of these stocks that are going to be trading 24 hours a day, 6 days a week at potentially different prices. What is that going to do to price discovery in general? I think we're in for a lot of discovery ourselves as investors as to what this actually means. That said, you go back to the very beginning. This is the 4th year of a bull market. Bulls that run this far usually do pretty well in their 4th year, despite the volatility we will see around midterm elections. You and I both follow Sam Stovall at CFRA. We know what happens during midterm election years. Expect a correction, if not worse, but this bull does have momentum, and that momentum is coming from those profit gains. A lot of the big stocks are driving that. Let's see if they can continue to run in 2026.
I appreciate your optimism there, Caleb. Great to start the year with you.
Thank you. Thanks for having me.